You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA, from the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges. We exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it is time to kick off our broadcast week here on the Options Insider Radio Network. And we do that every Monday with the Option Block, noon Central, 1 p.m. Eastern. My name is Mark Longo from the aforementioned network, as well as, of course, from a little thing we like to call theoptionsinsider.com. Get over there, check it out in between shows. A lot of great content over there for you guys to check out. And, of course, if you like what you hear on the network or any of the shows that we do here, make sure you keep those reviews coming in your platform of choice, because it really does help people continue to discover the network. We see new people all the time. I know it's hard to believe we've been doing this for so long. There's new people still, but yes, there are. They're discovering us en masse these days. So keep those reviews coming. It helps folks find their way to our door. And, you know, we like to do things a little bit differently these days. Kick off our broadcast week in style. Have a little bit of fun at the same time. You guys have certainly grokked to it, sending in a bunch of submissions for this segment. I don't have at hand who sent in this one, but it's a good one. We like to kick off our broadcast week, get the blood pumping, maybe stump our co-hosts a little bit as well with a little bit of fun Guess That 80s Song trivia. So this one, like I said, this is a good one. When you think of iconic 80s themes, this is up. This may, dare I say, this may be at the apex. Embodies just about everything 80s in one. So it's only short. It's only about a minute, so maybe I'll play the whole thing. Copyright on YouTube, be damned. Let's just have some fun here. But it is time, so without further ado, let us begin our 80s theme guessing game segment. right. That's about as 80s as it gets. Thank you to, I forgot who sent that one. And keep those submissions coming. You guys love to A, hear the 80s music to kick off the week, and B, you like to stump our co-host. So a little bit of fun, 2-for-1. I'm not sure how much stumping is going to be on that one. That one's pretty iconic. But that said, first joining us, holding down the NASDAQ hot seat this week, our old friend, Mr. Matt Amberson, the founder and CEO at ORATS. I do believe making his first appearance on the Option Block program. So A, welcome to the Option Block, Mr. Matt. And B, can you name that tune, sir?
I didn't know it was this fun on this show, Mark.
we kick it off hardcore on this show.
Wow. I thought we were going to talk about hard stuff. I guess ZZ Top, Sharp Dressed Man. A little trivia. So I grew up in Manhattan Beach playing beach volleyball, and I was in the music video of Sharp Dressed Man. So if I get that wrong, it's pretty embarrassing.
You were in that music video? Oh,
yeah.
Well, that is not the right song, so you got that wrong. But it's still, I didn't know that. I have to go watch that video now. See, we'll have to play if we could spot Matt.
Yeah, very slow
in the background there. I guess you're wearing like a fun '80s suit, maybe like a skinny tie and stuff.
I was actually wearing a tuxedo with fluorescent tie. So that was very 80s.
Wow. See all these little nuggets we discover about our co-hosts over. That's what this segment's all about. Discovering fun things. I heard a laugh over there. So I do believe let's have our rock lobster. He's had a rough go with this segment of late, listeners. We've discovered he didn't really watch a lot of TV in the 80s. Maybe he can guess this one. It's about as iconic as it gets. Mr. Rock Lobster, a.k.a. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Light Capital. A, welcome back to the program. And B, can you name that show, sir?
Okay, so this was the hard part. I think it's either Magnum PI or Baywatch, but I can't remember which one.
Oh, my God. We're 0 for 2 here so far. We'll have to see what's good. I thought this one was easy. In fact, my producer, they didn't know what I was going to queue up here, and they guessed it as soon as they heard me describing it, before they even heard the song. They said, oh, that could only be one song, and they typed it into it, and they were, of course, correct. So they guessed it right before either of you. All right, I am pleased to say now that we are joined once again. He is back on the old all-star panel, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, glad to see you're feeling a little better, sir. Welcome back to the show, A. And B, can you name that tune, sir?
Well, although I never watched the show because my parents wouldn't let me stay up that late at the time, I'm going to guess Miami Vice.
Ah, yes. Uncle Mike, crushing it. Crushing it again. You got Airwolf out of your back pocket. Now Miami Vice. I thought this one would be a home run. I thought I was handing Matt an easy victory. Instead, he guessed the music video that he was in, but not the song. Oh, wow. We learned a lot today. Fascinating. Hope you guys like that. I know you guys like this segment. You guys get excited as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. A little bit of bonus homework. You guys have to go out there and find that old video of Sharp Dressed Man. See if you could find it. Take a screen grab and send it in of Matt dancing around there in the background. I kind of want to see that myself. Bonus points to our producer who guessed it before even hearing the music. That was indeed very impressive. All right, welcome to the trading block, the portion of the show we break down what the heck is trading, and a lot is green on the screen to kick off the week here this week, listeners. Looks like the market heard our tune, but heard it a lot earlier than our show, and they got fired up. They got revved up for the week because most of the major indices are firmly in the green. We've got Dow, once again, the laggard, up a paltry and a meager 1%. We got S&P feeling its oats, up almost 1.75%. That usually would be enough for number one, but not this week. NASDAQ once again taking the top spot up. Get this, almost 2.6%, listeners. So just huge green day there on the street. Apparently, all these concerns we had not too long ago, a stimulus package still seems like it might be in doubt, yet doesn't seem to be bugging anybody. The coronavirus concerns we had with the president getting diagnosed and a growing wave of cases around the country, all of that apparently firmly in the rearview mirror. S&P now well back north of 3,500 at about a 35, 36 coming into showtime. So a lot of green on the screen today. That puts our old friend VIX Cash a little bit down since our last show. Go figure. It was about 25 even coming into showtime. I think it's like about 25.25. Now that puts it at about down a little over 2 handles, about 2.25 handles from where it was this time last show. Our old friend VVIX, a.k.a. the volatility of volatility, at about a 112. So getting a little bit frothy again. Vol is moving. It may be getting lower, but it's still moving. And so VVIX ticking up nearly 8 handles from where it was this time last show. And our old friend VXX, a product that these days is loving to go nothing but down, is going straight down about 2 points since our last show. So huge erosion, down to about 22 handle. We were talking before about that 30-22 put spread not too long ago that was up for size out there, and it seemed like that was maybe a little aggressive, maybe a little bit of a bridge too far. And then fast forward a month or two, and here we are at the 22 handle. And our old friend VOLQ, we just broke it down in a lot of detail last week. Check out our show last week with Scott Nations if you missed it for a detailed breakdown of what VOLQ is and the launch date. VOLQ, of course, NASDAQ 100 volatility at about a 30.25 coming into showtime. Since we're talking VOLQ, Matt, you are holding down our NASDAQ hot seat this week, so let us start with you, sir. What is lighting up your tape on this pretty aggressive upside start to the trading week, sir?
It's quite a hot seat, Mark. Yeah, and by the way, the VOLQ, it's very interesting because the ORATS, we calculate a bunch of different volatility metrics, and with VOLQ using the at the money, which I have always done in our calculations at ORATS, it matches up a lot better. So very interesting VOLQ, and it's of course trading now on the futures exchanges. So that's going to be interesting, and hopefully we'll get some options next year. I remember being on the floor with Andrew when his firm, Group 1, was starting to trade the NDX right as they announced options and coming to the SIBO floor. And I remember doing that research. So it was way back when options came out on the NDX and now hopefully on the VOLQ. So it's a great product, and I'm happy to be here representing. Yeah, what's lighting us up? It's really a tale of two markets in my estimation here. The NASDAQ, it's all green on our indicators. Contango, which is the front months and the back months. You want to see if you're bullish the front months underneath the back months in the implied volatilities of all the expirations, and that's what we're seeing. We look at some forward volatility relationships. That all looks good. But interestingly, today in S&P 500 land, their contango has come down. It's really flattened out and almost got negative. So that's really quite shocking to me in a very bullish day that we're seeing those kind of between 30 and 45, 50-day volatilities that you normally see the front months well under the back months in these types of markets actually flattening out. There might be something with upcoming earnings. It might be a lot of things, but it's there's definitely some interest in volatility out there. It's not just all going up. It's a little bit of frightenedness in the S&P complex, whereas the NASDAQ 100, it's all green lights right now, Mark.
I like that. I like coining new terms here on the show. Frightenedness. There's a little bit of frightenedness out there in the SPX versus the NASDAQ. Why should you be scared in the NASDAQ? The thing's up 2% a day. I don't care what's going on in the rest of the world. NASDAQ just feeling the upside. Speaking of the NASDAQ, you mentioned earlier, and Scott touched on this a lot on the show last week as well, kind of just the at-the-money nature of VOLQ. It's kind of interesting because in some ways it's kind of a throwback, right? It's kind of a throwback to the old school methodology you just mentioned back in the day when you and Andrew, and of course when I got on the floor, when VIX was still OEX back in the dark days. It was just the at-the-money straddle, effectively. There wasn't a lot of other, some people will term it noise that goes in and out there. I think the SKEW has some value, but of course it depends how it's calculated and how it's utilized. And I know Scott was saying last week, looking at how these vols are these days, sometimes it's more useful to have just the straight-up at-the-money. And there is some meaning to that. Looking back in the old days, people would come and do a straddle run in the pits. They wouldn't say, hey, by the way, give me the 25 delta put and 25 delta call. It was just the at-the-money straddle across the board, so they can get a frame of reference for what the at-the-money vol and what the term structure is out there in a product. And that was kind of their vol snapshot out there. So there certainly seems like there is a segment of the audience that wants that pure, just the facts, ma'am, just the at-the-money vol. And it sounds like, Matt, that kind of lines up with how you guys do it over there at ORATS land as well. Is that correct, sir?
Well, we want to see what's going on in the complete surface. So we have the 30-day, we have the 90-day, we have the 2-year at the monies. But then we have, even a 5 delta call. And then on the other side of the spectrum, 5 delta put, 25 delta, 75. Where are things lining up. And so if you have a clean index like the VOLQ, you could then compare out of the money volatility to that at the money volatility. Whereas the VIX, if the wings are shifting, that's going to affect the at the money. So what we often do, and in our charting package, you could divide a certain delta level with another delta level, an implied volatility, and come up with that relationship, and then look at it all the way back to 2008. For example, we were looking at Apple during the SoftBank deal where they were buying all these calls, and we had never seen the put-call ratio get so low. In effect, we're seeing the calls almost trading on par with the puts. We hadn't seen that looking all the way back to 2007. And we were able to divide the 5 delta with the at the money, and that's what is good about just identifying that particular segment of the volatility term structure and SKEW, and also be able to see what those relationships look like, not just right now, but historically. So that's one good thing about the VOLQ, and another is the settlement. The settlement goes over a longer time. It's a VWAP. So if you have a position and it goes to expiration, I think you could feel a little bit more comfortable that you're going to get actually what the market is showing out there in the underlying options, rather than maybe you get an idiosyncrasy of a way out of the money put or call that you might get in the VIX there, Mark.
You invoked our friend, the SoftBank whale, a very hot and contentious topic out there in the option space. Of course, as you mentioned, a lot of option volume, a lot of call volume bidding up that call SKEW out there. We've been kind of debating on this network for a while what that guy or guys, what they were really up to out there. Were they just swinging for the fences like a lot of people thought they were doing and just bidding up these options volatilities and perhaps the underlying as a result? Or do you think maybe it was more of a stock replacement, maybe taken, because they had, according to the 13Fs, they had about $1 billion worth of Amazon and about $500 million with Alphabet. So they had a lot of underlying coming into the end of Q2, maybe swapping that for a little bit of stock and taking some of their gains off the table. I'm curious, Matt, what are your thoughts there? Do you think the whale was substituting, or were they kind of just adding on and swinging for the fences?
Well, I think that they had a very positive view, and I had also heard that they were doing verticals, so way out of the money verticals. So I think what was happening is they were buying these calls, and it was kind of self-replicating as the market went up. The gamma started kicking in, the negative gamma for the market makers kicked in, and so it accelerated it. So they actually, it was I think it was kind of a stock replacement that allowed them to have this gamma and really benefit from it. And then they had a short call that they were help paying for it with, and they really flattened out that SKEW. And they were, given what the market makers were having to buy even the farther out of the money calls to have some unit protection. So, I think that they actually played it pretty well. And I think one of the instigators of it at SoftBank had done this. I don't know if you'd call it market manipulation or what, but he would jump into markets where they were a little bit fragile and take such large positions that he almost dominated those types of positions in other markets. And it almost looked like that's what they did, running that rally up to their strikes. And I think they made a lot of money. So it's hard to say what really happened, but me as a conspiracy theorist, I think the worst first, and that's how to survive as a market maker. So
you certainly get a degree of cynicism bred into you if you spend enough time on the trading floor. But since we're talking cynical, let's go the opposite way. And I want to come back to you in a second, Matt, because I know you have a lot of great earnings volatility to share with us in a second too. First, let's go around the horn. Let's go the opposite of the cynical way. He couldn't join us on the show last week, so let's get him on today to make up for it. Mr. Uncle Mike TOSAW, sir. It's an Uncle Mike type of day. It's green everywhere you look, unless you're looking at the vol products out there. What is lighting up your tape on this Uncle Mike Monday, sir?
Well, a bunch of things, quite honestly. We have the big Apple event coming out tomorrow. They say people say it's going to be a big event, but in reality, it doesn't look like there's any new earth-shattering technology, but it's Apple. So that means everything's going to be good, and it means Apple's always going to go up because Apple just is coming out with something new and cool. Because it's cool. It's going to go up, of course. Not really, by But that is something that's lighting up my tape. Apple's up almost $7 on the day today. So that's a pretty hefty move for Apple. Silver's still recovering from the pullback that it had a couple weeks ago. We're still getting close, not quite to the highs of where it was, but we're getting closer to it. And right now it's flat on the day today, but did have a nice little rally last week in my absence. And then we're getting really close to me being able to say my trademark saying again, which about the stock market having all-time highs again. We're not there yet, but we're getting pretty close. And this is definitely getting pretty interesting right now for those of us that are in the bull camp. So I think just with what we have happening right now, VIX is still at 25. So this is an all-time high with a VIX at 25 and with the at-the-money options high as well on the VOLQ. And so when we have this, it's always unique to there's things you can do with volatility higher that you couldn't do with volatility lower. Now, of course, the opposite is true with volatility lower, but where I'm going with this is that if you want to sell some out-of-the-money covered calls, a lot of times when we're at market highs like we are right now, it oftentimes is not very beneficial to do so because the premium's not very good, quite frankly. But now, if you want to sell some covered calls, it can be fairly rewarding to do so if you want to get a little bit more juice at higher levels. And I'll be talking about some things that I'm looking at on the NDX a little bit later in the strategy block. But for right now, I think it's a bullish premium sellers market, so to speak, in that it's not the market that we've had the last few years where I would just kind of shock myself and say I'm buying out of the money calls and making money on them and having success with them. It's not that kind of market right now, but it's the kind of market to where you can do things with spreads, you can do things with covered rights and things like that and have some success on them and still be a bull. So looking forward to talking about that a little bit more on the strategy block today. And that's what's lighting up my tape.
Thank you for that, Mr. Uncle Mike. And last but not least, when you're talking about die-hard New England cynics and skeptics, you got to go to the Rock Lobster. Mr. Rock Lobster, sir, what is lighting up your tape out there? And this definitely not Rock Lobster type of day, sir.
It's funny when I met Matt, I swear it might have been 28 years ago right now. Like 93 or 94, something like that.
So almost when Miami Vice was live on the air.
You know what, too, is the worst part is I can remember the intro to the show because of like the girls in the bikinis on it, and I could not place the show for the So,
you remember the important parts.
Yes. It's amazing what sticks in your head. But anyway, as far as so we finally had actually a break from that kind of what I would call that higher level of vol when those VIX futures were in the 30s last week. Trump with the COVID, then he makes this like Superman recovery. Apparently that's what he's calling it. And I think really it seems like the bid for vol changed pretty tremendously after the Kamala Harris and Pence debate. For whatever reason, the air came out of the bubble. I think maybe Trump recovering for COVID. I don't know if that was enough, but whatever it was, the election juice really lost a bid. The Strata lost a bid. But what's funny is it was still actually pretty well priced if you think about it, because I think it was like the No 3 at the money Strata was about $180. I mean, we've had a $100 move since then in just a week, and we still have 3 weeks to run. So it was not that the vol was overpriced by any stretch, to be honest, because we're still, I think we had a 26, 27 realized vol over the last probably 6, 7 trading days. So pretty high vol still. Pretty high vol stocks at highs. And a 1% move doesn't take much anymore, right? That's $3.35 or something for the SPY. So, actually, it's $3.50 now, right? $3.50. So, if you think about the election premium is still there, as Matt was alluding to, it doesn't seem to phase the Qs very much. So, it's strange that I think a lot of the more sensitive parts of the economy, like COVID sensitive, having more trouble. But all of the stuff where everybody's living online just took off. It started taking off in April, and it really hasn't stopped. Like anecdotal stuff like Peloton, right? Remember last year we were talking about the commercial, or they didn't like the guy bought the bike for his wife and everybody's screaming that it's sexist, and the stock was like $16, right? Like, oh, this company's done. It's done, right? And, I don't think we said it was done, but it was definitely bad news. And the stock's up tenfold from there. Almost like in a year, basically. So, I think, and another thing, Matt's been around and TOSAW's been bull markets love call buying. The SoftBank guys knew it. It probably worked out all right for them. And we're still in one. Apple's up 7 prior to this 5G news. Apple has never had an up day, I think, after a product launch that I can remember in 10 years. They bid the crap out of it. And everyone's like, oh. And then, there's a little bit of letdown. That might happen again today. I say that with bitterness because I was long some calendars that were great. We blew through the strikes and I ended up making a whole lot of nothing on the trade. So stock up $10, I don't make any money, which isn't great. But I wasn't looking for this much of a pop. But overall, there's still some pretty bullish sentiment out there. And I think a lot of that has to do with there's more, a lot of this market activity is COVID news related. There's more cases, but now there's more science about the lockdowns aren't working. So do we learn to live with more cases? But there's more kind of flow in that direction. It doesn't feel as I would just say kind of horrible and overwhelming as it did maybe 3 months ago when the cases were jumping up again. I think now it's maybe it's just going to be more expected. Who knows? But one way or another, SPX is up a lot. And generally, the market's not looking at what's happening today. It's looking at what it thinks is going to happen a year from now. And I would say just don't get in the way of the tech area at all because who knows how high it can go. Matt remembers 2000 and 1998, 98, 97, 96. So it feels like we're just kind of in the middle of that or just kind of starting. So I think some realized vol is going to be here to stay, though, just because these rallies are so brutal. You have a 6% up move in Apple, which is even a lot even to a product announcement. So the upside rally is hard. It's hard for VIX to get a whole lot lower than it is with what's happening. It's just that's the math of it. So I don't think, and I don't expect it to stop, to be honest, anytime soon. I'd be surprised if we see a 20 volatility after the election. I think that's probably a reasonable low, but a lot would have to go right, and the market would have to stop moving. And it has not proven the case for any period of time. So. But at least from a vol product point of view, there's a lot of juice in those futures now. Things can move. Like middle of last week, I'm like, oh, this stuff is going to be stuck on the election. And literally after the debates on Wednesday and Thursday, I'm like, wow, the vol can move again. They're starting to let the juice out of the premium. And now all of a sudden the futures can move down. Those vol products and puts and stuff can pay. So a bit different of a story today than it was on even right when we were doing our show on Thursday. So there was huge change in the perception from, I think, the future side between now and then.
Huge changes indeed. Let's see what those changes have afoot for the overall options volume today. Kind of an active day, but it really depends where you look out there. Like, for example, if you look at VIX, you'd say, not so much. Only about 135,000 contracts on the tape as of a few minutes ago. The ADV right around 340 or so. So pretty light out there in VIX land right now. But SPY, anything S, putting up some paper today. SPY already at 2.7 million. That's well over half of its ADV, which is a little bit north of 4 million out there. The S on fire, 814,000 contracts as of a few minutes ago. That's a lot because the ADV is just a little bit north of 1 million. So the S almost already there on a day's worth of volume. The Q, similar story, 955,000 contracts on the tape. The ADV about 1.25 million out there. So NASDAQ, go figure, up 2.6%. They're going to see some paper. Small caps, kind of the laggard, only about 300,000 contracts on the tape. Their ADV is north of 500,000 out there. So a little bit quiet in small cap front. Let's see what's not quiet in the names you guys like to trade, the single names. Well, let's start with number 10. This has been a frequent offender in the top 10 of late. This is DraftKings, good for 194,000. That's how much it cost you to break into the top 10 today. So almost 200K to break into the top 10. That means it's a fairly active day in single name land, listeners. Number 9, NEO, back to electric car land, 200K even for number 9. Number 8, AMD, so dropping from number 3 down to number 8. You know, it's an active day for some other names if that's the case. AMD at 229,000 contracts. Number 7, we saw this one in the top 10 a little while ago. It's back again. This is Workhorse Group, ticker symbol WKHS. Good for 230,000 contracts this morning. Number 6, Ford, 261,000. Number 5, good old Amazon. Now we're north of 300K, 331 for the Amazonians. Number 4, Facebook, 371,000. Number 3, Microsoft. We're getting some of the usual suspects here in the top 5 now. Microsoft, 373,000. Number 2, Tesla, 456,000. And get ready for this, listeners. Number 1 with a freaking magnum bullet this week, Apple. I mean, we're barely halfway through the show here, and already 2.5 million contracts on the tape. I mean, this paper in Apple is just something else. The stock is up 7 handles today in the anticipation for this big. They're calling it the most significant Apple iPhone event in a decade. I don't know if that's true, but they're certainly selling it like that. And the market is certainly buying into this because it's driving some paper. I mean, there's 2.5 million contracts. This, again, goes to show, maybe some of the Robinhood crowd flocking back in to all things Apple. You guys, Matt was just talking about how you hadn't seen the call wing as bid up ever in the history of Apple. Maybe that's still the case out there, even post a SoftBank a little bit. Speaking of Matt, Mr. Amberson, you are the keeper not just of all things index volatility, but you also crunch some numbers out there in a little bit of earnings volatility as well. And it's a perfect time to have you on because we're getting back into it, sir. We're kicking it off this week with earnings season. Some big names on the docket yet again this week. Some big financials, BlackRock, Wells Fargo, JP Morgan, Bank of America, Walgreens, United Airlines, Alcoa. A lot of names you guys have actually heard of kicking off again this week. So, Matt, let's start. Give us a synopsis. I actually have a question for you about last season, because last season you were even saying it was the most blood red season we had ever seen. Then it seems like the data ticked up in the last week or so, and all of a sudden, even looks like you guys revised up like week 4 and week 5 to make them a little bit higher, because it ended up being about 92% in terms of how much vol was priced in, which is how much was delivered last season. So if you could catch us up on that and what your thoughts are on last season, A, and then B, we're kicking off a new season. What do you expect for this cycle, sir?
Yeah, last season was the bloodiest on record for us, and yeah, it did tick up a little bit at the end when some of the implied moves came down. But I think on Twitter we were talking about it with the group of highly active people that look at that earn move report and listen to Option Insider. And I think one of the best points was that these stocks are moving so much in anticipation of earnings coming up, and anticipation of just something hitting the news and getting maybe Robinhood's attention. And, they're moving so much before earnings. It's like earnings is an afterthought. And the earnings move really didn't do a whole lot, but then vol would come down as it does after earnings. And those people that were left holding the bag, the option owners, did not end up doing very well. And we just saw it time after time in the July seasonal earnings announcement, and we're seeing actually this this season is still 1% over the past earnings move, so not as great as it was about 2% higher than the earnings move last season, but now it's still 1% over, and I thought that it might be a little bit better, but there's so much in the market. There's so many other things other than earnings. Just the market moving around a lot of volatility in the market. The election coming up. So I don't know. I mean, I don't think the option holders are going to get the better of the sellers this week. I know I'm going back and forth, but looking at it a little bit further, that there's a lot implied. You mentioned some of the names that are coming out in the first week, and by the way, the first week is not usually very good for option holders. But we have Delta Airlines is 6% over its normal move. Let's see here. So we have, and then the rest of them are, the banks are, still at least 1% over what their normal moves are. So I don't know, Mark. I always root for, I backed myself and other market makers, so we'd like to be long options or at least flat. And these sellers that would come in, I've always been on the side of the owners, and I don't know. I don't think they're going to fare too well this season, Mark.
We'll see. It's just kicking off. We have the reports over there on theoptionsinsider.com, courtesy of Matt and his team over there at ORATS. So check in throughout the season. We have updates pretty much every day over there. Earnings move results, and earnings season reports for your hot little hands. Now it's time for us to keep on rolling, though. Get a little weird, get a little wild. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block. Let's kick it off. Let's unleash our Eye of Sauron. It's been out there. It's been staring. It's been gazing into the ether, so you don't have to. And first, its gaze has fixed upon... This is a newcomer to the Odd Block. We haven't talked about this name in quite some time here. This is ARMK, ticker symbol ARMK. You know these guys, they do all those corporate cafeterias and everything else out there. Trading today, $28.68, up about 20 cents. Not a huge underlying day out there for ARMK. Let's see, over the course of the past year, a year ago, it was trading about $44. And then during the big madness, the great nadir, it sold off to $9.65. Not exactly surprising. Not a lot of corporate dining going on when everyone was fleeing their offices and heading back to home to shelter in place. So I can see why ARMK got kind of beat up, but they made a decent recovery by, let's see, they peaked. I bet you can guess when this name peaked, listeners. Yep, June 8th, like a lot of our other names have, at 32.25. So they rallied not quite 4x, but pretty close to it by the time June 8th came around. And then they gave pretty much all that up again. And within a few weeks, they were trading down 21.65 again. So they couldn't really make it. And they've slowly fought to rally back to where they are right now, 28.68 out there in ARMK land. Let's see what our Eye of Sauron found. Looks like a big block of puts. Perhaps, dare I say it, Mr. Rock Lobster, some line in the sand puts, your old favorites. In particular, it was 10,000 even of the Dees 28 puts. So these are pretty much at the money puts, listeners, going up for $2.15. This was right on the bid. The bid was $2.15, and they hit it for 10,000. So that was a pretty firm bid. They were able to take a bunch down there, going up over there on the Philly. By way of reference, this is a almost 50% IV, about 49% IV. Mr. Rock Lobster, this has all the hallmarks of your favorite trade. A nice line in the sand put. Is that your takeaway as well, sir?
I'm looking at it, I'm saying, it's look at the strike. It's kind of, besides 3 days in COVID land, 20 is pretty much the low. So, and I think TOSAW might have said it earlier too, is when VIX is this high, you get to do stuff you don't normally get to do. So my guess is you're not normally selling puts in basically a cafeteria company when the vol's usually about 19 for 50 vol. So I think this December timeframe, the yield is pretty good. Instead of owning stock, you can get almost 10% of the value of the underlying. And I think that kind of value just, is bringing people in. So if you're an investor and you want to own a stock like this, $28 is it's not a terrible price to own it. So the only thing I'd say it's a little close to the money, but still the yield is there. But normally I would say you don't quite get that kind of a bid for those sort of puts in a stock like this. But because it's 2020, you do. So again, not quite line in the sand, I think, just because of the strike. Looks like the 28 strike. But I could see it if it was the 20s. But anyway, pretty decent yield for those puts for a stock like
I guess
that.
At the money, kind of hard to be lying in the sand, more like a, spit in your face kind of put. I dare you to go down 60 cents. I dare you. Because you're right. That's the only maybe issue you could take with this is it is a pretty close to the fire type strike. We'll come back to this one, though. Other than that, I'm with you. It does seem like it's an interesting, and this guy clearly not afraid of picking up some ARMK south of that 28 handle and doing it for size. He says, hey, corporate cafeteria is coming back in a big way, and I'm going to get myself some, and if not, I'm going to get myself a nice $2.15 for the privilege. Let's put that one in our to-be-watched category. If you're saying, what follows hot on the heels of corporate cafeterias, well, of course, it's fancy graphing calculators. Yep. Talking about Texas Instruments. Obviously, they do a lot more than that. It's just burned into my brain those days of using those old TI graphing calculators out there. But coming into today's show, Texas Instruments, ticker symbol TXN, at about a 155, even up over $4 and change. So about 2.75%. So a good day for Texas Instruments. A year ago, they were trading about 130, so about 25 handles shy of where they are right now. They got down to about $93. In the great nadir of the March timeframe, then they kind of rallied back pretty quick. They topped out again on June 8th at 132 and change, and then they kind of gave up the ghost for a while. But unlike a lot of our other names, they then managed to rally back. By the end of July, they started pushing through and actually above that June 8th high, unlike most of our other names, which have been well below it forever, and topping out where they are right now, back at 155 out there. So they've regained everything they lost in March and then some. Let's see what our Eye of Sauron has fixed upon out here. Looks like, Mr. Rock Lobster, maybe we're going 2 for 2 here with yet another of your favorite trades here. Another line in the sand put, perhaps. Let us see. This is the Nove 135 put, so pretty near term, pretty out of the money. Yeah, this looks like it might have all the hallmarks of the Rock Lobster favorite, going up 9,728 times through the bid. The bid was $1.85. This is kind of what I expected for the other one, having to go a little bit aggressive to get almost 10,000 done, yet they had to go through the bid here down to $1.83 and some splits to get 9,728 of these bad boys done. So Mr. Rock Lobster, this one kind of looks like a duck and quacks like a duck. What do you think of this one? You think this falls into your category of your old favorite, the line in the sand put, this time in everyone's favorite graphing calculator name, Texas Instruments, sir? I bet you have one of those calculators on your desk right now, don't you?
Oh, yeah. What's funny is your phone can do those types of things now.
Yeah, it doesn't seem crazy to spend $100 on a calculator when you could do that anywhere now.
What's funny is I had to get my kids because they can't use their phones for calculators. So for a scientific calculator, they needed to get one of those. They're about still like $30 or $40 for those. Anyway. This is more line in the sand type. Looking at 145 on this. Let me see the strike again because I was just looking at TI. Okay, 135. So that's $20 lower. That's also kind of like the tech rec lows we just had recently. So it does have line in the sand flavor. I'm going to say there is a little bit. Not as much as like those just really dumping those out of the monies like we've seen before. I think maybe this is a reflection. I think people are getting more aggressive and becoming a little bit more of a believer. I mean, again, Matt was talking about SKEW and then sort of how things are priced, but vol doesn't come down until people start selling puts, and you start seeing sales like this. And we see more and more of them. Not really, we saw a lot of line in the sand over the last 6 months going, 30, 40% out of the money, just trying to take that small yield. And now they're banging away at relatively close to the money and just taking the money that's out there. So I'm actually looking at some myself. So I understand that's A little bit of change in sentiment because people are getting a little more aggressive, and they're getting more aggressive. Hey, surprise, at near all-time highs. The Qs are $4 away from 300 again.
All right, we'll do one more quick one here because this is actually a return to the hot seat very quickly here. It's time to unleash the Huns yet again. That sounds familiar because we just talked about these on the last show, listeners. This is, of course, ticker symbol HUN. This is Huntsman Corp. They're a chemical manufacturer out here. If you remember on our last show, just last week, we profiled the NOV 21 puts going up for a decent size, about, at least for Huntsman, about 4,350 times. They were pretty much close to the bid there. So we put those in our to be watched. We didn't have to watch too long, though, because today, now nearly 4,766 of the NOV 22 puts going up, also on the bid for 43 cents. So interesting stuff. Mr. Rock Lobster, we already talked about the Hun stock. I won't profile it again here on the show today, but it seems like we got a little bit of a new addition to our Huns puts. And by the way, those other puts I did check before the show, they are still open. So we got someone opening for almost 5,000 of the NOV 21 puts. Now someone else coming back today and either saying, hey, I like that, I want to do something similar, or hey, I'm the same guy, I want to do more, and I'm going to do one strike above it. What do you think? What do you think of these additional nearly 5,000 puts here in the Huns, sir?
So what do you think about that? Somebody went out there, sold those things, and they're kind of hanging out here now, I believe, right? We're sitting right at the those are the 22 puts, and we're hanging on. So I'm looking at those things. Are they ever going to close them? And they're like, well, we are seeing some volume. So I think, let's see here. I see 5,000 of these things trading today. So we profiled these on the last, and I'm seeing, those are the 21s for 40 cents. I think they're piling on some more, to be honest, because now I'm seeing the NOV 22s. 5,000 of those are trading. And again, it looks like from a volume, I'm just looking at the print. And they sold those for between 40 and 45 on splits. So I think somebody's actually doubling down and doing more.
Yeah, it does have that air about it. Someone said, you know what, that put SKEW isn't crushed enough. I'm going to come back in one strike away and crush pretty much almost the exact same amount more. So obviously we were watching the other ones. We're going to come back and keep an eye on these ones. These aren't that long to go. And we'll see what's up with Hunts. Maybe by next show we'll have more people crushing downside puts out there. Meanwhile, though, it's Monday. It's time to not just unleash the Huns, but unleash Uncle Mike, because it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. It's Monday. It's time for some options, wit, and or wisdom. And there's so much going on out there. We got Matt in the hot seat talking about VOLQ. We got NASDAQ moving over 2+%. Everyone's catching NASDAQ fever, including... it sounds like Uncle Mike. Uncle Mike, sir, what do you got for us this week in the strategy block?
Well, I wanted to kind of do the opposite of what I did a couple weeks ago, and I want to do it with the NDX today. Now, full disclosure, I don't own these actual positions. If anyone wants to know my actual positions, feel free to call me. I'm happy to talk to you about it, but compliance prevents me from saying specific positions on air. But a couple of weeks ago, I talked about a trade to where I did a very narrow put spread. And I set it up in such a way to where it was pretty much a coin flip. If the market were to go higher or the market were to go lower by a very small amount. And it worked out well. And so now I'm going to do something kind of not necessarily the opposite of it, but a way with which to trim deltas. A couple weeks ago, I needed to add some deltas, but this week I needed to trim a couple deltas with where I was. So once again, this isn't the exact strikes or anything like that I'm in, but I want to kind of give you an idea of it. So let's say that I have a NASDAQ, an NDX call that's going my way, or a basket full of NDX stocks that are going my way, or whatever the case may be. I'm making some money, and I need to trim up my deltas a little bit. But on the flip side, if this, let's say that we just have more bullish news to come, and the markets just continue to go up to the high heavens, I don't want to miss out on it. So what can I do, Uncle Mike? Well, here's what you can do. And I kind of did something like this today, actually. So let's say that things are going your way and you want to trim some deltas a little bit. Well, one thing that you can do is right now, NDX is trading roughly 12,150 approximately. And with that, let's say that I'm in that situation and that I want to trim off some deltas, but if this market does go higher, I want to participate on it. Also, I want to get a little bit of theta on there as well, working in my favor. Well, one thing you can do is you could sell a 12,150 call and buy a 12,175 call. 25 points is what you have on there. And you can get roughly $12.50 for it as a credit. And that's based upon the midpoint. Of course, it might be a little bit more, might be a little bit less, depending on where you get filled. But that's where you're looking at. So let's say that, and I'm doing this 2 days out. So let's say, for example, that NDX just goes down. Well, that's 12 points or 12 and a half points that you got for basically just taking a little bit of risk off the table. But let's say that NDX continues to go way high. We go up another 4% tomorrow or whatever the case may be. Well, you're missing out on 12 points. Now, to give you guys an idea of that, the NDX is actually up. I'm showing roughly 420 points on the day to day. So granted, it doesn't go up that much every day or down that much every day. But where I'm going with this is that this is another way with which you can just kind of add something to your trade if you're looking to trim a couple of deltas. And it's something with which to think about. Now, how many deltas do you want to trim? How much theta do you want? Well, that just depends on the amount of contracts that you have or where you're at with it. You may not want to trim that much. Then maybe if you have 15 or 20 calls bought on the NDX, then maybe do 2 or 3, or if you want to do more of it, then you can do more. What I would encourage you to do, though, is just look at the Greeks with this and trying to measure out your position. So the opposite of what we discussed a week ago or a couple of weeks ago, is what you're able to do when you need to trim some deltas. Now, granted, I did a couple of more adjustments, so it wasn't just a clean delta trim for me. So for those of my clients that are listening to this, it wasn't quite as simple as I'm making it out to be right now. But I want to go through the concept of something with which you can do when you want to trim some deltas. And that is the strategy block for today.
Thank you for that, Uncle Mike. And now it's time to keep on rolling into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on for our trading screens, at least until the next time we can all gather here together on the option block on Thursday. Matt, holding down the NASDAQ hot seat, sir. We shall start with you. A lot of earnings vol on the horizon, a lot of index vol, a lot of things to keep an eye on. What are you watching for the rest of this week, sir?
Yeah, so I'm still a little worried about the S&P 500 versus the NASDAQ. So I think that this earnings season is going to be very interesting. This might have something to do with the way that the volatilities are lining up. Like I said, that contango has been a really good indicator for us. We graph it every day. We look at it. We look at it for the tech stocks with the NASDAQ. We look at it for the S&P. We look at it for other sectors out there. So that's what I'm looking at that. I'm also looking at the way that these markets are interpolating the earnings moves. Are they going to be, like we're seeing right now, 1% higher than normal? Are they going to start paying off? This is going to be, an interesting earnings season. I mean, when are they going to have to really start talking about what's going to happen to some of these stocks? They keep pushing the buck out. When are investors really going to look at it? I don't know. I mean, a lot of the Robinhood investors, they might not be as hip to the earnings as a lot of the investors that are in institutions. So, I think that there's a lot going on in the market right now that's very interesting. There's a changing of the guard in a sense. They're not really looking at earnings as much. They're looking at just momentum. They're looking at volatility, and that's what we're seeing in the market, Mark.
Thank you for that. Mr. Matt, Mr. Rock Lobster, same question for you, sir. What are you keeping an eye on for this week? What's Volman up to this week, sir?
Volman closed a couple of puts today, not a ton, but some. I'm looking at I have to say, like this realized vol in the tech, I think these options are too cheap, like the short-term options. So just like short-term, long gamma type stuff, see what happens. And seeing, I think vol, at least VIX and the futures have kind of stopped here because the market just went straight up. So it's hard for vol to go down when stocks just blow apart on the upside. So those are the big things. And if we have a fiscal deal, right? I think part of this is some sort of deal that might be happening. Remember last week, no deal, and everything plunged, which I think we talked about it even. That was like the old art of the deal coming back from the China trade war days. No deal for you, right? No deal for you. And then, he reversed like 24 hours later, which he did probably all 2017 and all 2018, I think. Anyway, I still think options are a buy based on realized vol. Things are moving. So that's what I'm watching. And if we do get a deal, look out above. I don't know what an opening is going to look like because it's 2020, so just be prepared for a surprise. That's all I'll say there.
And be prepared, unfortunately, for the end of the show, because that's what that music means, listeners. All right, but before we go, let's go back around the horn, listeners. Let's start in the old NASDAQ hot seat. Mr. Matt, sir, if folks are intrigued, they want to learn more about what you're cooking up over there in the land of ORATS, maybe kick the tires on your back tester, or check out some earnings reports, where should they go? What should they do, sir?
Yeah, come over to orats.com. Like I said, we have that charting software where you could see the VOLQ type relationships between certain delta levels. We have earnings. We have live data now with the Tradier integration that we have. You could see our smooth market volatilities if you're not sure what the value is. If a mid-market doesn't really line up, check out our smooth market volatilities. Lots going on, and great to be here on the show. Thanks a lot for the opportunity, and hopefully I represented the NASDAQ well.
Speaking of NASDAQ, if you like what Matt was talking about, all things NASDAQ volatility and VOLQ, you can find out for yourselves. You know where to go. NASDAQ.com/VOLQ, VOLQ. That's the place to go to get all the information, the contract specs. The futures are now live and out there trading over there on CME. Hopefully the options coming soon. We'll be able to sink our teeth into those as well. NASDAQ.com/VOLQ. If you want to talk to Uncle Mike, all you got to do is go to stcharleswealth.com. Uncle Mike, if they do such things, what can they find out there, sir?
Well, happy to talk with anyone if they're looking for a financial advisor who is not afraid of the option product and oftentimes embraces it. Just excited to watch the market developments, quite frankly, every day. Every day is a new day in 2020, and I have to say that I have never been bored all year.
Well, that's certainly one way to describe 2020. It is many things. I think boring is not one of them. You are correct. I think we can all do with a nice boring 2021. Let's have it be the most boring. I don't know if I want to go back to 2017 lows of volatility, but a nice boring year might be good for the soul here. And last but not least, Mr. Rock Lobster, sir, what are you and Vol Man keeping an eye on this week?
If we could see some lower volatility futures, change in the curve, something that Matt alluded to. Anytime the curve kind of changes shape, I think it's always significant. And we're also getting close to getting out of zone 4. It has been a long, long time out of the danger zone. So we're one full vol point away from it. If that happens before the election, I think that'll be an interesting opportunity. We might see a 20 vol after November 3rd. So interesting stuff there. And go over to optionpit.com. Are we at it? Or go to our memberships page and look up all our goodies that we have.
Check out the goodies for yourself. Optionpit.com is the place to go. And on behalf of the rockingest of lobsters and the uncleest of Mikes and the oracleist of New Hampshire's, a.k.a. Matt, and, of course, our friends over there in NASDAQ land, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing, for listening live, for sending in your questions. If you are listening live, stay tuned. We'll be back in a little less than an hour now to talk all things popping off on the crypto side of the volatility spectrum with the folks over there at Genesis Vol. They got some great data to break it down. A lot of stuff popping off over there, so we're going to get into that in a little bit. And, of course, other than that, you can tune in tomorrow Interview Tuesday with some great chats here on the network. Education Wednesday, Option Block, I should say Options Bootcamp, and indeed Options Playbook Radio. Thursday, of course, back with another episode of the Option Block.
The Option Block is brought to you by NASDAQ. From its inception, NASDAQ has been an innovator and agent of change in the financial markets. It's in our DNA. From the development of electronic trading to our drive to bring enhanced functionality and world-leading technology to our suite of 6 options exchanges, we exemplify customer focus, consistent technology, and streamlined solutions. Now NASDAQ is proud to launch the NASDAQ 100 Volatility Index, ticker symbol VOLQ, to its suite of exchange indexes. VOLQ uses only at-the-money options to provide a precise measure of NASDAQ 100 volatility. Learn more about this exciting new volatility product at www.nasdaq.com/VOLQ. NASDAQ, leading the U.S. options market and continually rewriting tomorrow. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.